You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Are you paying too much to trade options? If you're not trading on public.com, the answer is yes. Public is the only platform where you can earn a rebate on every option contract traded, and that's in addition to no commissions or per contract fees. There's no one else out there paying trading rebates, so you won't find a better deal. Bottom line, if you're paying more than $0 to place an options trade, then you're paying too much. Switch to Public and start getting rebates on every single contract traded, only at public.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Well, let's all find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you folks are having a good time. I'm having a good time. Seems like you folks are having a good time as well. A lot of you having a good time on the new futures addition to the network, the Futures Rundown. We did talk about VIX futures a bit on the show this week. So vol popping up in all sorts of fun places. Yet another reason why, if you're just listening to vol views, and hey, we love our vol views listeners. We love you all. But if you're just listening to vol views, man, you're missing out nearly a dozen other shows, including vol that pops up quite a bit on many other shows. So wherever you're getting this, make sure you're getting the full network. It's easy. Just go find Options Insider Radio Network and subscribe to that instead of just vol views, or maybe in addition to whatever floats your boat. Then you get everything that's coming on the on-demand side. And if you want to go above and beyond, you want an additional exclusive podcast feed. It's going to get you oddities. It's going to get you awesome pro Q&As like our friends over there at Fidelity this week, tackling all your questions. A lot of vol talk on that one as well. A lot of vol in the pro, quite frankly. It's kind of like a vol pro in shorthand out there, where everything goes back to vol, it seems like these days. TheOptionsInsider.com/pro, the place to go to learn more. Remember, if you haven't done so already, if you're one of our longtime vol views listeners, you haven't kicked the tires on our friends over there at Public yet, check it out. They have a landing page just for you. It's just public.com/VV. It's really easy to remember, /VV. Don't you have to type volatility views, just /VV. It's pretty much the easiest way to support the program that has been coming to you for well over a decade, bringing you the latest and greatest in the world of vol. Just public.com/VV. Hey, you can do a lot worse than getting paid a rebate to trade options. And they say they're looking for vol people. They're looking for VIX folks over there. So head on over there, public.com/VV, kick the tires and light the fires. Just go to that landing page, and they'll know you came from us. And it goes a long way towards helping the show keep coming to you for yet another decade as we go around the horn and see who's joining us on the old program today. First, let's go out to, could be the hinterlands of Chicago, or maybe out in Indiana, or who knows? Maybe he's still stuck in Utah. Let's find out. He is the once future and present Dr. VIX /VSTOXX, a.k.a. Mr. Russell Rhoads, beaming in from the Kelley School of Business these days. Mr. Rhoads, welcome back to the program, sir.
As always, very, very happy to be here. I did get off the mountain in Utah and made it back here and went down to Indiana and then made it back here to the very safe western suburbs of Chicago. And
I like it.
Next week, the travel continues.
As we keep rolling out to the Southern Volatility Mecca, the site of last year's RMC. This year, they were left high and dry, unfortunately, but we are joined once again by the Meatball, a.k.a. Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Hey, good to be here. There are giant reverberations here in Austin as PBR is being bought by TKO.
Yeah, I heard about that.
Can't wait to hear your comments on that. I'm sure that's your lead story here today.
Yes, lead story on the show. Then also joining us, I believe doing his best Darth Vader impersonation. I like it. He is a newcomer to the program, holding down the Eurex hot seat this week. He is Alec Clements. Got to do the British pronunciation. Alec Clements, the CEO of PricingMonkey. Alec, welcome to Volatility Views.
Hey, great to be here. Thank you for having me.
And Alec, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of vol, as well as what the heck it is you guys and gals do over there at PricingMonkey.
Yeah, sure. So I'm a former rates vol trader. I spent most of my career at Barclays, and I did a stint as a listed options market maker as well, trading short-end Euro rate vol. And when I was a trader, I used to write a lot of code, build a load of pricing tools, and I noticed a few things. I noticed that the building tools is hard, and the third-party tools that were out there, they seemed to fall well short of what I thought was possible. So I got together with a bunch of co-founders about 7 years ago, and we started a company called PricingMonkey with the aim of revolutionizing the derivatives pricing tools market. So we built a product. It's completely different to anything else that's out there, and it's a product that our users tell us that they really love. I think it's fair to say we've become a market standard with the big macro hedge funds and the investment banks for analyzing listed rate vol. We're now kind of moving in on equity vol and VIX, looking to get our analysis really, really on point for those markets. So if anyone out there is interested in knowing more about PricingMonkey, head over to PricingMonkey.com. And although I'm not a VIX trader, I hope I can bring some kind of fresh perspective on the problem.
Interesting. Should be a fun time. So you were at Barclays as well. So are you to blame for all the issues with VXX? Should we point the finger at you, sir?
No, I'd left before that happened. That debacle.
That whole debacle. So not your fault. Okay, just want to clarify that.
Not my fault. I'm innocent.
Clarify that at the top of the show as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's do it. Let's dive right on into the Vol review for this week. And it's yet another day where we're kind of starting out mixed. Lately, we've started out mixed and we've kind of trended in one direction or the other. We'll see if that is the case today. But right now, as we're coming into the start of the show, we've got the Dow once again kind of leading the charge to the downside, off about 0.25%. So not a huge day, at least in the Dow. S&P up about 0.5%, so feeling its oats again. Well north of the 5,800 level. It's kind of been vacillating around a lot of late. And the NASDAQ feeling its oats out there as well, up 1.25%. So it's kind of one of those mixed days out there. And you know what? Just because we always leave them off the list, let's go check out our friends in small caps, up about 0.4. Actually, I take it back, up about 0.2% out there today. So kind of a mixed bag out there across the street. Nothing really lighting the world on fire, with the exception, of course, of the NASDAQ looking a little bit robust. And all this green on the screen, at least for right now, and with the exception of the Dow, obviously means our vol friends taking a bit of a break today, off about 0.25 point in VIX cash today, but On the week, we are still net up. We're at about an 18 3/4 right as we kicked off the show. That puts us up not quite 3/4 of a point, about 0.6 of a point from where we were this time last week. So vol obviously still a little bit frothy, still a little bit firm. I've heard all your complaints from all you vol put buyers, all you faders of vol heading into the election so far, at least. Not really coming to pass, but we shall see. We shall see. There's more to come as the election approaches, and our old friend Vol of Vol, aka VVIX, getting a little bit firmer, getting a little bit frothier again this week. Back up to a 109. That puts it up about 8 points from where it was this time last week. All right. Let's head on out now let's kick things off in the old Eurex hot seat. Mr. Alec, as our guest, we will start with you, sir. What is catching your eye out there in the volatility markets this week?
Yeah, I've been looking at VIX, unsurprisingly. VIX had the money vol a little higher than I'd expect for this level of the VIX index. What caught my eye was the flatness of the VIX futures curve. It's kind of pretty flat, the front four contracts. Dec Feb has got a little bit of slope, but it's still the 20th percentile. So I thought I'd throw the PricingMonkey backtest engine at the problem. So I backtest selling the second monthly future versus buying the fourth monthly, and doing that whenever that spread is less than 0.3. So it's kind of a variant on the classic sell the front VIX future trade, but hopefully with a little less kind of terrible downsides when things blow up. But the result is really great. Actually, this trade has made money every year back to 2008, and its down days of less than 5% of the time. Its worst down day was 2020 blowout, which was a 22 loss. But on average, it's making 2.3, quite a lot on a futures spread trade, I think. So that's my tip.
There you go. I like it. Right into the meat. Right into the suggestions.
Yeah, I want to give you something that you can trade.
I like it. Getting right into the nitty gritty out there, listeners. Well, we'll probably talk about that more in a little bit when we get to the VIX futures curve out there, because a lot to be said out there as we're, of course, heading into the election and things are, as you would expect, a little bit wonky, a little bit topsy-turvy. But before we get there, let's go out to the Southern Volatility Mecca. Mr. Meatball, sir, same question for you. What is catching your eye out there in the vol market this week?
Yeah, the VIX keeps trying to break back below 18 and keeps failing. The S&P continues to kind of hang out between 5,800 and its all-time high. Today, kind of some weird price action. Mark, did you see what happened with Goldman and why they're getting smoked? Because it was up this morning, and then next thing I look, Goldman's down $10.50. It's down 2%, kind of out of nowhere. So I'm wondering kind of what's happened with the banks. And I'm continuing to watch bond vol, because that to me is where the real if this market does break, it's going to be from the bond market.
Yeah, I'm looking here. I don't see anything except for a bunch of people talking about Chinese stock purchases being down. I'm not sure why that would weigh specifically on Goldman. But yeah, you're right. I don't see what's turning it. So you know what that means, Mark? More sellers than buyers out there right now.
And indeed, there are more sellers than buyers. But it was just weird. We had things looked super rosy. I was commenting to Andrew that, hey, this might be one of those days where we get kind of a parabolic second leg up in the afternoon, and instead they've just been kind of taking it down on the back of Goldman. The other piece that's interesting, and this has been a short signal for NVIDIA, is that it's worth more than Apple. Every time it's done that once, and that was the last time it peaked. So just keep that in mind.
Yeah, Goldman down about 15 handles from the high intraday today. So they've had quite the wild day, up to nearly 530, listeners, 528.80, now trading 513.88. So quite a wild intraday swing here for Goldman. Not a name that we usually associate with those, so kind of interesting. We'll keep an eye on it. Maybe if anyone in the chat has any ideas about what's causing some dark side here in good old Goldman, then keep us informed as we go on out now to Dr. VIX / VSTOXX out there. Mr. Rhoads, a lot going on in the vol space. What is catching your eye out there this week, sir?
Goldman Sachs, and I dug through the tape real quick as well. Looking at just the chart this week for spot VIX, last 2 days we've gotten a little bitty spike above 20, and then it got shot down like a whack-a-mole, which just makes me wonder what that might be all about. If they're getting kind of expensive out there in the SPX complex, or people trying to take advantage of that. But we have a really we have. If you look at a 10-minute chart? Yeah, the 10-minute chart, it looks like, if you take the numbers off of it and everything, it looks like we had these mini volatility events that lasted about as long as volatility events last in this day and age, about 7.5 minutes. But VIX is, I've had the good fortune of going to RMC last week, and this week I was participated in a Eurex event. And just a common theme among a lot of people for the very short term is wait and see. And we're just seeing that play out price-wise. We're going to, I don't know if you spend too much time on social media like I do, and you get the ads every once in a while telling you to shut everything down and go away for a while, and it'll make your life better. I feel like I could go away for 2 weeks and I really wouldn't miss anything right now.
I don't know, 2 weeks right now, you might miss something interesting coming up at the end of that period.
Well, yeah, let's say however many days till the election.
Maybe a little bit short of 2 weeks. I could see your argument out there. You mentioned your beloved RMC. Last week, you said you needed a week to digest, to get your thoughts together, to put together your full critical analysis of all things RMC. So I have budgeted for you, sir, 41 minutes. The show is yours, sir. Have at it. What are your salient takeaways, the highlights that really resonated for you from RMC this year?
You mentioned this
in terms of the VIX. That futures term structure is, it still kind of looks like the Big Dipper, if you will. You've got November trading above everything, and then the rest of the curve is completely flat. VIX is trading at a premium. So we're in backwardation still, but it's kind of a weird backwardation. I mean, I feel like post-election, we could see an epic vol collapse if the market holds up for the next couple of weeks.
Mr. Meatball diving into the VIX futures already. I like it. Getting ahead of me there. But by the way, our chat is all going on about the fine from Apple and Goldman, but that was yesterday. I don't think that would be crushing it today.
Not it.
I don't think
that's not it at all. This is just some random. There's something going on there, and I don't know what it is, but it ain't good, and it's taking the whole market down with it.
Whither goes Goldman, so goes the rest of the market. All right, Mr. Rhoads, sir, now you've had time to prepare yourself. What are your salient takeaways that the folks should know from RMC from this year, sir?
There seems to be an awful lot of interest in systematic selling of shorter dated options. That has not worked for the last 3 or 4 months. I've got a study on using NASDAQ 100 options that it just looks atrocious. If you had been selling NASDAQ 100 options on a consistent basis, and I know that's not the show, but that's the study that I did, you'd have been, as we used to say in the pits, you'd have been carried out long ago. And I think that is something that's happening in the United States because there are ETFs that are selling short-dated options. There's a lot of systematic exposure to taking the short side on options that expire in just the next few days, and it's flipped the script. And now it seems like long opportunities are the way to go. And I mentioned this one last week, and this is one that really has stuck in the back of my mind. It didn't come up with the Eurex event, but with RMC, an awful lot of how can we use derivatives to replicate 60-40 performance, because 60-40 doesn't work anymore. 60-40 didn't work once. Or it doesn't work once about every couple of decades or so, and that's not the time to abandon it. So, I know that the conference is where everybody's talking about derivative strategies, and that's what the focus is supposed to be on. But for average folks, I think you're probably better off just going back to the boring old 60-40 approach. wasn't all about it. It was just the things that stuck out to me. And what stuck out to me was that's what a lot of people are talking about. And I can see that selling short dated index options has not worked for the last few months in the S&P, NASDAQ, or Russell 2000. And whereas in 2023, selling 3, 4, and 5 day straddles worked beautifully, which makes me think that we've got lower premiums this year because of the systematic approaches that feel like they're trying to take advantage of the persistent overpricing of options. And there's enough of them in the market that we don't have a persistent overpricing of short-dated index options in the U.S. anymore.
Intriguing stuff there, sir. So interesting stuff. Yeah, not exactly what I expected coming out of RMC.
No.
I expected your usual, VIX calls versus SPX puts, and also the majesty of selling. What was that?
I said not a whole lot of hedging talk either.
Really? Okay. Different show.
One guy, a whole ton of it, but and then there was one guy who was ripping on the tail hedge people pretty badly.
And let me tell you, there was at least a panel full of Canadian vol funds, because if that's not there, then what are we doing, right?
I think there was one there. Maybe.
Yeah, there we go. They've always had to have something.
And there were some French people there. They're always
RMC has changed a lot probably since. When was the last time you went, Mark?
I got to say, probably like 4, maybe 5 years ago now. Yeah.
Yeah, it's gotten a lot more with all the 0DTE and everything going on in VIX. It's gotten a lot more academic and a lot more intricate than just like covered call writing. Especially since options are now the dog and equities of the tail. There's I don't think I'm trying to make. I think there was maybe 2 discussions on overwriting last year, but most of it was on how to hedge implementation. There was obviously 0DTE was huge, some things like that. It was not your father's RM. It's not your father's RMC anymore.
Not your grandma's RMC. Is talking about selling them out of the money puts all the time out there. Alec, are you a big vol conference guy or conference guy in general? Have you ever been to, let's say, the European flavor of RMC? Or I know Eurex does some cool vol events over there in Europe as well. Have you ever hit any of those over there, Alec?
I never have, and we're talking about going, actually. So we've been hiding away, writing code and doing our own thing, but it's time to kind of get out there. So RMC sounds interesting. I'd love to go.
I know they had it in Iceland recently. I'm not sure when the next European iteration will be or where it will be, but certainly interesting stuff. Speaking of interesting stuff, let's get to the futures curve. Mark was already talking about futures, and Alec also looking at a little bit ahead to the futures curve as well. Coming into the start of the show, surprise, surprise, that front end of the curve firming up slightly from last week, but again, nothing to write home about. That no future up a little over half a point as we're kicking off the show from where it was this time last week. The December future up about 1/3 of a point. The rest of the curve slightly firmer, but nothing crazy. You still can't sniff a 20 handle. The closest you get out here looking right now, if you go all the way out to middle of the year next year, go out to July of next year. So summertime, not usually known to be a bastion of volatility, but that is where you can find a 19 handle, at least right now, on the term structure. 1905 going all the way out to July. Alec, you kicked us off with a very intriguing VIX futures spread. We kind of touched on it there, but let's go a little bit deeper into it now, maybe for some of our folks who are still kind of digesting it. Hit us with the spread again, and then what was it that you saw on the term structure that made it so attractive to you?
So the spread I was recommending was selling the second out future, so the DEC at the moment, and buying the fourth out, so the Feb. And what caught my eye was I just stacked up the future spreads in PricingMonkey and looked at the Z scores and the percentiles, and they were the more wingy. I had looked at a bunch of stuff, but those stood out as the most interesting thing on my delve into VIX and VIX options. And Yeah, so once I found something interesting, I was like, okay, what's the trade, and can I prove it out with a back test? So the trade's a steepener, and it's kind of a variant on the selling the second or first VIX future, but it performs really well. I mean, it's like I might send you the back test chart so you can put it on your social if you want, but it's like its down days are rare. And it makes money. It's made money every single year back to 2008. Admittedly, 2008 it did quite badly. So
I think a lot of things.
2020.
A lot of things did poorly in 2008. I think so.
Yeah. It's tough to find a trade that does well and does well in 2008.
Yeah. So, do you like this setup just for right now, or is this a structure you're going to repeat? Selling effectively the 2 months out and then going against the 4 months out. Is that a structure you like rolling throughout the year, or is it kind of just right now?
Well, I've put a signal on it. So I'm saying do it whenever that spread is less than 0.3. So it's 0.25 at the moment. So if you do, you have to do it when it's flat. If you don't want to do it all the time, because you don't make nearly as much money that way. And I mean, admittedly, I think it's 2013, and it never got that flat, so you didn't trade that year. But most of the time, you're in this trade 25% of the time, maybe, something like that.
25% of the time. That's a pretty active VIX spread, all things considered. Interesting stuff, listeners. So we're always talking about the options. We don't talk spreading the futures as often, at least on this show. Starting to pop up a bit on the futures rundown. So intriguing. You like that setup, listeners? Hit us up. Let us know out there if you are intrigued. Mr. Rhoads, you like that setup? Are you down with that? And what else is catching your eye out there in the vol surface this week?
Well, I'm down with that. I was actually, I got my thunder stolen a bit. I don't like that. Because I was actually looking at December at a 20-cent discount to January and thinking that that's too narrow, and that that will likely widen out a bit, especially if we get a resolution to the election before December expiration. Everybody will probably be bracing themselves into 2025. I kind of like February, and in fact, February, I've got it quoted basically in line, if not a little bit lower than January right now. And I think that's an improvement on the idea that I was going to throw out there, because if we, I feel like the February probably will hold up a little bit better and probably be higher than January if we get through the election somewhat unscathed. So now you've got me doing extra work.
That's the fun of the show. And you're right. February pretty much in line with Jan, slightly cheaper, actually. So that does make it more interesting. Mr. Meatball, let's see if we can go 3 for 3. Are you down for that? A little bit of Feb spread in the VIX term structure right now, sir?
It makes some sense to me. I don't hate it. The whole curve looks like it's primed for a future spread the way it's set up. I mean, it is about as flat as it ever gets. The front end of the curve is kind of overbid. The back end of the curve, you could almost argue, looks a little cheap relative to historic trends. So, yeah, I like the idea.
Yeah, and December, you're right, certainly does stick out as well, that we know traditionally that is a seasonal wasteland for vol. So the fact that it is as close as it is to everything else around it is potentially intriguing and worthy of note. You know what else is intriguing and worthy of note? It's a little bit of international vol. So let's head out there next.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of EuroSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, listeners, let's go a little bit beyond our shores now. Let's see what's popping off in the international vol markets, particularly setting down over there in the Eurozone. See what's popping off from a VSTOXX perspective. You see, coming into today, VSTOXX looking a little bit firmer than it was this time last week. So we've got some intriguing trends going on between VIX Cash and VSTOXX, as they are wont to do, but obviously widening out a little bit. Now, not quite apples to apples, of course, because VIX Cash still trading. VSTOXX is now closed. I think Russell has talked before about maybe taking a snapshot from that closing time with VIX Cash versus VSTOXX to get a more salient comparison of their respective levels. But still, coming in right now, VSTOXX at about an 1891, up about 1 2/3 points this week. So certainly firming up, and firming up comparatively even more than VIX Cash, which is kind of interesting out there, which is why we run the numbers at the end of the day. Remember our range on VSTOXX this year. The high, again, you could probably guess it, August 5th, 31.16 to the upside, the low. That's why I was just talking about December looking a little bit aberrant to me on that VIX futures curve, listeners, because 52-week low for VSTOXX, 12.12 hit. Guess when? Smack dab in the middle of December last year, December 15th. We kissed it again back in March, but that was really the low for the year, December. So intriguing stuff, hanging out close to a 19, obviously closer to the bottom of that range than the top. Mr. Rhoads, intriguing stuff. VSTOXX firming up a wee bit this week, sir. What's catching your eye out there?
So, a couple of trades. Sorry, I'm tripping around here. We did talk on the Eurex program yesterday. We talked about that big Dees, 1x2 with the 17 puts and the 15 puts. They continue to eke profits out of that trade. They got out of another 1,000 on Wednesday. Another trade I kind of like. Somebody sold 3,000 of the November 24th 20 calls on Monday for $1.20, and it says tied to futures. I think they paid $1.80 for the futures. I'm sorry, I think they paid 18 for the futures. Futures gotten itself up to 18.50, so they made 50 cents off that. They could get out of the short call with a 20-cent loss right now, so they're looking kind of okay with that trade. Again, the future was at a lower level when they put that one on. I generally don't like to think about a short call as being hedged, but it would offset some of the losses if we get if November VSTOXX starts to come under a bit of pressure. And then somebody's taking a flyer trade here. They bought 5,000 of the November 24 call, the November 30 calls, and bought a bunch of those on Monday, probably hoping for some sort of volatility event over the next couple of weeks. Did you say 30?
I'm sorry. I know I cut you off. Did you say 30?
The 30 calls. Yeah, they bought the 30 calls.
Wow. What are they getting those for?
Well, I just lost my page that had it on there.
That'd be quite.
I'm moving around too quickly, Bark.
That'd be quite the run for VSTOXX. 30. Wow. Okay.
45 cents.
Wow.
They paid 45 cents for them.
They're not giving those away.
Didn't say I liked it, but that's what they did.
I could see if they were like a nickel flyer, maybe a dime. Okay, sure. 45 cents. Wow. Yeah. Sold to you, sir.
I didn't say I liked it. I just thought it was the biggest trade of the week.
You said you loved it, as I recall, sir.
Yeah. And then, like we said, the term structures basically looking a bit like ours. December is at more of a discount right now. If you really want to get cute, you could buy Dees Eurex, or I'm sorry, buy Dees VSTOXX. Buy the Dees in short February and do it like a box spread against VIX.
Now you're getting super cute, sir.
I know. Now, we sell December VIX, buy February VIX, but then we buy December VSTOXX and sell February VSTOXX because that spread's 80 cents. We got a very funky and intricate spread trade there.
You don't even need to get that cute. Whatever, if you want to buy vol in VSTOXX right now, upside, whatever you want to buy, you can get a 45-cent discount by selling those stupid 30s against it. So there you go. Leg into any vertical you want, 45-cent discount, courtesy of whoever's buying those 30s for 45 cents, listeners. So there you go. 20, 30, whatever that is, you're getting it for cheaper because of that elevated upside vol. So yeah, it might be a good vertical shopping out there. Or you can go the Russell box way. Whatever floats your boat. Anything else, Mr. Rhoads?
No, that's it. I know we got a lot of things to cover.
All right, then. Let's keep on rolling. You like those listeners? We should make a little flash poll. Russell's funky 4-way box or a nice discounted vertical in VSTOXX. Which way are you going to go, listeners? I'm curious as we keep on rolling out there to the land of all things VIX options right now. And you know what? Not a heck of a lot lighting the world on fire in VIX. In fact, before the show, we had to make sure that the system was working because it was only showing 85,000 contracts on the tape for VIX. I haven't seen it that low, in not even in the dog days of summer. This year, it was blowing the doors off in August, so can't remember the last time we were at 85,000 coming into the start of the show. Thankfully, things have firmed up a little bit out there right now. We are up to a whopping 195,000 contracts on the tape. So yeah, VIX doing a whole heck of a lot of nothing today, listeners. That probably is, that'll put this lower ADV that I'm going to tell you about now probably in a little bit more perspective. The ADV continues to come down, as it seems like is happening across the board in the vol complex. ADV is coming in everywhere, which is interesting. You'd never notice looking at that one data point that we are heading into potentially a big vol event, aka the election. Usually it's the other way. People are starting to load up, but we are in this near-dated zone now, this near-dated world. So everyone might be waiting till the day itself to put on their trade. So probably eating into the ADVs as a result. 770 is the ADV in VIX land. Now that's down another 32,000 from this time last week. And if we get more days like today, it's going to keep coming in. We'll be at 500,000 contracts a day pretty soon. In terms of the top 10 listeners, how are we looking out here in VIX land right now? Well, we're hanging out 6-4 calls over puts. So more puts fighting their way into the top 10, which makes some sense. We did kiss 20 a couple of times this week. Couldn't really maintain it, but we did kiss it a couple of times. So whenever we start threatening that level, we start to see a few more puts become a little bit more enticing to the folks out there. And that seems to be the case this week. Cost you 196,000 contracts to break into the top 10. That's about what you'd expect in VIX land out there. That gets you to our first of 4 puts, listeners, the Nove 14 puts. You like those? Those are your Huckleberry listeners. Number 9, 201,000 of the Nove 16 puts. Here we go. Put Palooza. Number 8, 203,000 of the Jan 42 half. So if you want a little bit of upside, there you go. Number 7, right back to the puts, 229,000 of the Meatballs favorite. I think he said this is his trade of the year, if I quote him correctly. The Nove 15 puts, they were around 30 cents last week. I think they're around somewhere around 25 cents today. So if you like them, they're close to that same level. Number 6, 231,000 of the Nove 40s. Number 5, 239,000 of the Nove doubles. So if the 40s not doing it for you, allow me to present the 55s. Number 4, 248,000 of the Nove 19s, 19s. Number 3, our fourth and final put in our top 10 this week, 288,000 of the Dees 13 puts. And I'd say 13, that's pretty far out there. But on the flip side, it is December. Remember what I was just saying about December earlier. So the 13 put, I'd say it has the best chance in the year in December. So obviously someone looking for a little bit of that seasonality action. Number 2, 303,000 of the Nove 35s. And the big dog out there right now, I guess given all these strikes, a fairly reasonable call strike, 310,000 of the Nove 20s. Which of those do you like, listeners? Which ones float your boat as we head on into a little bit of Russell's Weekly Rundown?
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
So nice. We have to play it twice. Mr. Rhoads, sir, what you got for us on the weekly VIX options front?
I got a few fun things. And there wasn't a whole lot this week. I know I say that very often, but this whole sit on our hands, wait and see thing, it does seem to be kind of a consensus right now across global Wall Street, as they call it at Bloomberg. On Tuesday with VIX at 1839, somebody sold the October 30th 20 calls for 58 cents. They bought the 25 calls for 17 cents. They took in a credit of 41 cents with a risk there of 459. This is going to go down as the trade that I'm not real wild about, just because of the dollar risk reward and I know that there's that we don't have any big potential events We've got non-farm payrolls that comes out after that. We've got an election and an FOMC announcement the week after that. So I understand we're wait and see, but I would be very uncomfortable just in this day and age waking up and China says they're not going to, that they're going to sell all of our bonds, or another country defaults on their debt, or some situation gets escalated in the world. So I'm not real wild about the dollar risk reward on that, when I do think we could go above 25 quite easily, and it doesn't take a whole lot to get us there. On Tuesday as well, late in the day, somebody bought 195 of the October 23rd 10 strike calls, and they paid $9.83 for those. And you're like, they expire the next day, et cetera. Well, 195 was the open interest. So that was the exit. And it looks like back on October 15th, they shorted those calls at 11.20. And when they shorted those calls, it looks like they were able to do it with about $1 of time value or so. So people will be like, why would they short the calls when they could just short the futures like that? Well, they did get some time value when they put that on the short side, and probably contributed an awful lot to the profits on that trade. And here's a trade that I do kind of like. I'm going to keep. Maybe I should be called the calendar king or something like that, because I'm always talking on here about how the 3-day weekend affects us, or when a reaction is going to be to different things. And just remember that the weekly VIX options and futures that expire the week of the election expire on the market open the day after the election has been completed, not after we get results or anything like that. So be very cautious doing anything with November 6th VIX options and holding them into expiration. Somebody here with VIX at 1942 on Wednesday, when it was doing one of those mini spikes we got this week, they bought a little over 2,000 of the November 13th 20 calls, and they paid $1.70 for it. And I know that sounds kind of expensive, but I mean those are the kind of premiums that you're probably going to have to pay if you want to get some leveraged long vol exposure into that first full week of November.
A little bit juicy out there, but you're right about the expiration. That's why in our question of the week this week, when we gave you a VIX straddle, we had it expire on the 13th, 1 week later. I'll give you a little bit extra juice. Nobody wants it to go away the morning immediately after, right? You want to have a little bit more time for things to play out, I would think, out there. So we took that into consideration for you folks as well, listeners. Is there a lot of VIX paper to consider this week? The answer, not really a ton. We'll kind of burn through this here. Today, like we said, not much. 195,000 contracts on the tape today. The big dog today, such as it is, 20,005 of the NOV 14 half puts, followed by about 15,000 of the NOV 15 puts. It's just a put palooza. 16 puts, 17 puts, and 13 puts, bottoming out at about 10,000 there, listeners. Yesterday, 528,000 contracts on the tape, so also not really a banger, even though the big trade was more active. 82,000 of the NOV 20s versus 46,000 for number 2 of the NOV 19 puts, 43,000 of the NOV 19 calls. That's right, that's synthetic against upside calls. We've been seeing this for a while. They did it for size yesterday. If it didn't do that, you're talking, 160, 170,000 contracts in that one trade. Without that, it would have been an even more anemic day out there. So not much going on yesterday. Wednesday, about the same volume level, 468 on the tape. The big dog, such as it was, 42,000 of the NOV 15 puts. So those coming online again, folks liking the 15 puts, perhaps. 27,000 of number 2 of the 19 puts. Number 3, if you don't like NOV, how about the D's 15 puts? 24,000 of those bad boys. Number 4, Jan. Man, 15 puts aplenty on Wednesday. Jan 15 puts number 4. 20,000 of those. We should do another flash poll. Which of those do you prefer? NOV, D's, or Jan 15 puts. And number 5, 19,000 of the NOV 16 puts. Tuesday, 795 on the tape. So looks like our banger day of the week, at least so far. Such as it is, nothing even close to 1 million this week. The big dog, man, 275,000. Oh, these are our old friend, the D's 13 puts. We were just talking about these. That's where they all came from. They were all opening. It was all on Tuesday, listeners. Without that, it was a pretty light day. It was back around 500,000 contracts. So, wow, somebody really liking those D's 13 puts on. This went up on the 22nd. Let's look really quickly, listeners, to see. Let's see what they traded them for. 15 cents in massive blocks, 85,000 and 74,000, and then 55,000, excuse me, You like those? These 13 puts for 15 cents? Not the worst flyer I've heard. It's pretty far out there, obviously. But again, it is December. So if you're talking, March 13 puts, I would say, yeah, maybe not my favorite. But these, I think you got a good chance there. And then Monday, 476 on the tape. 40,000 exactly, the big dog on Monday for the April 42 halves, followed by 40,000 as well, the Nove 40s, and 38,000 of the Nove 25. So it looks like some Nove vertical action, maybe against those Aprils. I'll have to go look and see. So an intriguing week out there. Alec, I know you're talking about looking at the VIX futures. You spend any time over there at PricingMonkey looking at the VIX options, sir?
Yeah. We have a look. I mean, I tried to play around with a few option strategies, but I wasn't sure I had anything that juicy.
Nothing as juicy as the VIX futures spread, sir.
The VIX futures spread looked much better. Yeah. I mean, when I run the back test, it sort of says stuff that's quite obvious, really. Like if VIX spikes up above, I did one where if VIX spikes above 25, sell the hell out of it, and especially if it's up there and has dipped for one day, it's like it's definitely going down, so to sell. So there's kind of strategies that you can prove out the active event-based strategies, but they seemed a bit obvious to me. I was like, and everyone's going to be like, yeah, he's just saying some obvious stuff.
Just buying an out of the money VIX call, rinse and repeat, that kind of thing.
Yeah,
you got to do what the back tests tell you. At the end of the day, Mr. Meatball, sir, kind of a quiet week on the VIX options front. But A, what caught your eye out there? And B, I know you like yourself a good out of the money put. Are you a fan of these DEES 13 puts going up over 250,000 times this week for 15 cents, sir?
Yeah, I noticed those going up. They built a pretty sizable position there. It is. It looks like a post-election play. What was interesting is at the same time those puts were going up, within minutes, for December in SPY. I know we never talk spiders here, but in SPY, a trader was buying the 610 calls and the 615 calls in December. Check it out. There's 90,000 of the December 610 calls open, and 115,000 of the December 615 calls open. Those were purchases. So somebody is very, very bullish into Christmas.
Yeah, putting it on two ways. The old Texas hedge.
There you
SPY
go.
upside, and then just for a kicker, for a little extra fun, also some VIX downside. By the way, Mr. Meatball, our chat is intrigued by your hypothesis that whenever NVIDIA gets above Apple, it sells off hard. So they're going to do some data mining. And if you're lying, they're going to put it to you next week. So that's what they're saying.
I mean, it's happened once, so it's not like there's that many data points for them to dig into. So,
well, there we go. We have a pattern of one. But our chat is intrigued by that nonetheless. So there you go. They're keeping you on your toes, making sure you're not talking out of school out here, listeners. We got already coming up against it, having a fun run here on the show this week. Let's keep rolling here out to the realm of all things vol ETPs. Let's start with good old SVIX. Was that a 2460 when we kicked off the show? That puts it down about exactly 1 point from where it was this time a week ago. Now down to about 2420, so that puts it down about 1.4 points. So SVIX continuing to erode. So it looks like vol getting a little bit spicier as the day has gone on, and that is the case indeed. Interesting. So SVIX continuing to be the disappointing player that it has been on the options front for a while. A whopping 2,800 contracts on the tape today. So the vol erosion we've been talking about in the vol space, even more pronounced in SVIX. Their ADV is down to 5,500. It's down another 300 this week. It's dropping nearly 10% a week. So at this point, I don't know, it's not looking good for the SVIX options. Mr. Rhoads, anything catching your eye in the world of SVIX, sir?
Well, and I know we're up against it, so I'm gonna jump a little on you. SVIX, I still have a full position. I sold some 25 calls a couple of days ago, so I'm kind of okay with what it's doing. But looking at the way the curve's acting right now, the UVIX, the UVIX thing that I talk about that I always do on Fridays, I'm doubling down on that one this weekend. This market doesn't feel good.
Doubling down.
That sell-off was weird. And
yeah,
the bond market
the way the market's acting right now, I'm doing twice what I normally do in UVIX.
The bond market looks funky.
And the 10-year yield it's been grinding higher. And eventually it's going to reach a point where the stock traders start to pay attention. So I would be worried about that as well. Sorry, Mark Longo, I'm sorry for going off on that tangent there. I know
you do what you got to do, sir.
Time, but it's just the way the market's feeling right now. It's just not feeling good.
Mr. Meatball, you are out there running an SVIX product out there. A challenging period for it.
It has been nothing but not fun over the last month. I know it'll get better.
Ever since you launched this product, I've never been less interested in SVIX. It's just
I know, but I'm hedging it. I am currently hedged. I will say that.
I was all in on SVIX. I was trading it like crazy. I was the one guy clearly trading the options out there. And then how long has it been since you had this product? About a month and a half, maybe 2 months?
Yeah.
Yeah, I haven't really touched it since then. It's crazy. It's crazy. I'm the reason the ADV has
been all over the place.
The whole lead up to the election has really wreaked a bit of havoc with the goofy term structure on all these ETPs. I mean, on the opposite side of it, this little weekend anomaly I found, it's worked better than it's ever worked. And my assumption is after we get past the election and we've got a normal term structure, et cetera, that it's going to be a bleeding strategy for a while. But it's just very difficult with anything, trying to use anything that's happened in the past to predict what's going on in the volatility markets, because we sort of have 2020 as a template, but not really. We just don't. We're really in some uncharted territory with respect to analysis.
Yeah, the vols was just so already high in 2020 that it's thrown things off. Yeah, I'm very curious to see how things play out over the next in the next 2 weeks. Thankfully, we get to stop talking about this stuff in 8 trading days. Hopefully
8 trading days as well. Since they were just on the show with us last week, let's give them a little bit of love. The folks over there at Simplex with their SVOL product. So if you're not feeling SVIX, maybe SVOL is your Huckleberry, listeners. 21.5, so not that dissimilar from a price level as well from SVIX. That puts it down about 1/3 of a point from where it was this time last week. In terms of volume, now obviously we were just lamenting SVIX being kind of light. Obviously SVOL is not going to be there right now either. It's kind of just getting its sea legs out from under it. 305 contracts a day, so not exactly lighting the world on fire on the options front. So if options are your bag, maybe you want to wait a little bit, but 100 contracts today, so it's, I guess, respectable. Underlying, though, might be more of a game for you. Oh, it's going XDiv out here as well, so which is why it's lighting the world on fire. Russell, we just had these guys on last week. Have you had a chance to really look at the SVOL product at all, and maybe compare and contrast it to SVIX?
I had a pretty hectic week in the. After you go to a conference, when you come back, it's always you always come back to an awful lot of work, and so I just haven't had a chance to get to that. It's on my list of things to look at this weekend because I really do want. And that's something I've been meaning to do for months, and just never get around to is the simplify stuff.
Yeah, it's intriguing. We'll probably have to have him on the show again one of these days so we can kind of follow up on all of that madness out there. Speaking of madness, we are really quickly, let's hit a couple others. UVIX almost 5.5 now, 545. It was at 5.25 when we kicked off the show. So obviously vol firming up as we're coming into the end of the show, up nearly half a point this week. About 20,000 contracts on the tape. The ADV, actually 28,000 now, so getting a little bit spicier out there. The ADV is 31,000. That's actually up 2,000. So UVIX managing to buck the trend out there. Maybe everyone's diving in on Russell's trade and trying to do some options trades against it. So UVIX looking a little spicy. The big dog out there right now, 8,900 of the 5 calls expiring today. So those are looking much better now than they were at the start of the show. So ballyhoo to you out there who loaded up on those 5 calls. Nearly 9,000 of those bad boys. As we keep on rolling, it's time to play that game, listeners. It is time for the Crystal Ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the vol gods for the coming week. Alec, I hope they prepared you for it, sir, because it's definitely the most difficult, the most dangerous, some might say the most damning portion of the show. And coming into the end of the show, like I said, we are looking spicier out there on the vol front. VIX kissing 20, 1991, an excellent year, threatening the 20 handle out there. And we already mentioned VSTOXX going out at 1891. So interesting, exact 1 point disparity right now between VIX Cash and VSTOXX. So this week, what do we have? I was at 18 double on VIX, 1676 on VSTOXX, so no joy for me. Russell, 1818 on VIX, 1717 for VSTOXX. No joy for him either. Mr. Meatball doing his palindromic dark side at 1551. 1661 for VSTOXX, no joy there. Then we had Mike from Simplify on last week. He just went straight VIX, 16.5. So a lot of us were feeling lower. I was kind of the rear up guy on the totem pole last week, but clearly not enough because VIX feeling its oats. If we had hung out where we were at the start of the show, I'd probably be looking a little better. If we had done the typical trajectory of drifting lower in vol heading into the weekend during the show, I would have been right at a bullseye. But alas, listeners, whatever is fueling this little sell-off, whether it's the Goldman rip down, whether it's something else, something is rippling through the market right now and causing some vol as a result. So all of that a long way around to saying no winners this week, which means, Alec, you get the dubious honor of going first, sir. What do you feel for this time next week in VIX Cash, sir?
I'm feeling it's going to be a little lower, but not hugely. I'm going to go 18.7.
1870. All right. I can get behind that. My prognostication from last week was not that far away. Mr. Meatball, you were the next farthest away, so you get to go next, sir. What are you feeling for VIX and or VSTOXX next week, sir?
You know, let's go with Russell's fear. All right, I'm going to go with 20. I'm going to go with the super palindrome. 22-22 for VIX.
Ooh.
And for VSTOXX, I'm going to go with 19. I'm going to go with 21-12.
21-12. An excellent album. And is it a good VSTOXX prediction? I guess we shall find out, listeners. And Mr. Rhoads, the second to last word is yours as the next closest.
Sure.
Well, what are you feeling, sir, next week?
I was going to go 2250 on VIX, but I'm not doing that now. I'm going to go 2050 on VIX.
You could do it. Why
and
not?
VSTOXX, I'm going to do 1975.
Why not? You still have over a quarter of a point above him if you wanted to do that.
No, I'm not going to do that for him.
And what did you say, VSTOXX 1965?
75.
1975. An excellent year. An excellent year, if I do say so myself. All right. It comes to me now, listeners. I was feeling more vol, a little bit spicier. Clearly not spicy enough. Meatball going super spicy. Even Mr. Rhoads going a little bit spicier. And even Alec going a little bit spicier than where we are right now. So it doesn't give me a lot of room. I was feeling more upside as well, just given what we're seeing right now. I'm going to have to carve out my own path here, listeners, because not a lot of landing points here. That's the danger of going last. That's what I get for being the closest this week. All right, so I'm going to say for myself what Russell is saying for VSTOXX, I'm actually going to say for VIX. I like that, 1975. And then VSTOXX, ooh. This one, I'm still dialing in my model, listeners. I'm going to say 2033 for VSTOXX. So firming up out there. All right. That music means we have come to the end of another journey through the world of all things volatility. But before we go, let's go around the horn. Alec, we will start with you, sir. If folks are intrigued, they want to check out more about all things PricingMonkey, where should they go? What should they do?
Yeah, just head over to PricingMonkey.com. You can get a bit more info, and you can request a free trial and a demo as well.
PricingMonkey.com, listeners, the place to go to kick the tires and light the fires. And Mr. Meatball, if they want to kick the tires and light the fires on maybe an SVIX product, or maybe looking at some SPY versus VIX or anything else, where should they go? What should they do?
Yeah, just head on over. Follow me on Twitter at OptionPit, and head over to optionpit.com. Check out everything we've got there. You'll be very happy.
Very happy indeed. And Mr. Rhoads, if you want to be happy, maybe with a little bit of Substack action, or perhaps a whole day. Isn't your whole day, or your whole day just happened? How did it go?
My whole day just happened. It went very well. Probably the biggest takeaway from the Eurex event was what a lot of people are saying, which is we expect volatility to start working its way lower once we get this election thing past us. But one panelist did say, if everybody's thinking that, I wonder if I should be long. Gotta like that guy.
The contrarian. I like it out there. I was thinking for some reason it was next month, but it happened yesterday. So,
well, I'm going to something called Quant Minds International next month in London. That's the end of my fall tour.
End of the fall tour. So if folks are intrigued, maybe they missed the stream yesterday, they want to get Russell Day again. Is there an archive available?
There is an archive available. If you do Focus Day 2024 Eurex, if you Google that, wait until early next week. I'll probably bring it up next week because I don't think they have it up quite yet.
Oh, so the archive not available, listeners, but wait till next week.
Not yet, but it will be.
So if you missed Russell Day in all of its glory, if 1 hour a week on this show is not enough for you, you need a full day, then Russell Day, all things VSTOXX, you can find it over there at Eurex.com. Once it is live, we'll send a link to it. We will also put out a link to the audio. So if you want to hear just the audio version, which we know a thing or two about, we will put that out there as well. So that way you will never miss a smidgen of Russell goodness here when it comes to talking VSTOXX. And of course, if you want to talk VSTOXX for yourselves, head on over to Eurex.com, Eurex.com. And while you're surfing online, make sure you check out our friends over there at public.com/VV. It's the easiest URL on the planet, public.com/VV. All you have to do is go there. That lets them know that, hey, you're coming from VolViews, and that helps to support the show going forward. And of course, they want you folks. They want you hardcore, bleeding edge vol folks, the VIX traders, the bleeding edge of the options market. They think they're ready for you. Maybe head on over there, kick the tires. Maybe they're not ready. Maybe you tell them what they can do to improve. Guess what? It's a brand new platform. They want to hear from our listeners. That's why they're doing this. So let them know what you're looking for. Chances are they'll add it. It's really cool. Public.com/VV. And while you're there, you get a rebate to trade options. It's a win-win, and it helps to support a show that's been coming at you for over a decade. Everybody wins at the end of the day, unless you want more show. Then you lose because the show is over. If you want more on the pro side, we already did oddities this week, listeners, so that'll be hitting. Actually, that already hit the pro podcast feed. You can check that out for yourselves. TheOptionsInsider.com/pro is the place to go to learn more. Other than that, we are out of here for this week, listeners. Have a great weekend. Maybe you take a look. I'm going to be roped into the chain gang in a little bit, but maybe if I have time on the sidelines, maybe I will throw in a closing bid for a little bit of Russell's juicy UVIX weekend goodness, and we'll all see how that works out this week. Listen, I agree. It does feel like one of those weekendy quote type weeks out there. So maybe keep an eye on, maybe keep your powder dry out there this weekend as well. See you back here on Monday for the option block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of EuroSTOXX, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. Are you paying too much to trade options? If you're not trading on public.com, the answer is yes. Public is the only platform where you can earn a rebate on every option contract traded, and that's in addition to no commissions or per contract fees. There's no one else out there paying trading rebates, so you won't find a better deal. Bottom line, if you're paying more than $0 to place an options trade, then you're paying too much. Switch to Public and start getting rebates on every single contract traded, only at public.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.